So, picture this. It's January 2025. A Chinese startup that literally nobody had ever heard of releases a new AI model. They called it DeepSeek. And just like that, in a single day, it managed to wipe $600 billion off NVIDIA's market cap, the largest single day loss of value for any company in the history of the stock market. $600 billion, poof, gone in one day. And the story that started spreading, well, it was terrifying. People started asking, what if engineers can build these amazing world class AI models but do it more efficiently, using fewer chips? If that's true, then maybe the whole idea, the whole thesis behind NVIDIA's massive valuation, maybe it's just wrong. Maybe the AI chip boom wasn't just slowing down, maybe it was already over. But then, just 6 weeks later, NVIDIA's stock had recovered every single dollar. And it didn't stop there, it just kept climbing. So, what on earth is going on here? Which story is true? Is NVIDIA really the most important company in the history of computing, or are we looking at the most dangerous bubble in a generation? My name is Farouk, and in this explainer, we're gonna go inside the machine and really unpack this. Okay, to really get this, we have to go back, way back. The year is 1993. Imagine three engineers huddled in a Denny's restaurant in San Jose. Now, they're not dreaming about dominating artificial intelligence, not at all. Their plan is actually pretty simple. They just want to build better graphics chips for video games. Seriously, that was the entire vision. And well, it didn't start off so great. Their first chip, which came out in 1995, was a complete commercial failure. Fast forward to 1997, and the company is just 3 months away from going bankrupt. 3 months. What ended up saving them was a contract with Sega, and then this one chip. It was called the GeForce 256, and it came out in 1999. So, NVIDIA starts marketing this new chip as the world's very first GPU, a graphics processing unit. And here's what's so wild about this. The term GPU, the CEO Jensen Huang just invented it. He didn't just invent the chip, he invented the entire category. He gave it a name, he defined what it was, and then he went out and built a whole market around it. It's an incredible move. Alright, so for the next 15 years, NVIDIA does pretty well. They're a successful, respectable, but honestly a pretty unremarkable gaming chip company. And then 2012 happens. Something goes down in a university basement in Toronto that is going to change everything. A researcher, Jeffrey Hinton, he trains this neural network called AlexNet, and he does it using two regular NVIDIA gaming GPUs. And get this, AlexNet didn't just win the competition, it absolutely destroyed it. I mean, it was so much better that it forced the entire field of computer science to completely rethink how AI should even work. And Jensen Huang saw this happen and he made a huge call. He pivoted the entire company. We're not talking about a new product line here, we're talking about a completely different mission for the whole company. He decided NVIDIA would no longer be just a gaming chip company. From now on, it was going to be an accelerated computing platform company. And let me tell you, almost nobody agreed with it. The board, investors, Wall Street, pretty much everyone thought he was making a huge mistake. Turns out he was not wrong. But here's the thing. That big pivot to GPUs, that actually wasn't NVIDIA's real weapon. Nope, their real secret weapon was something they had released way back in 2006, almost as an afterthought. It was a software platform called CUDA. What CUDA did was let developers use NVIDIA's chips for more than just graphics. Suddenly, you could use them for any kind of parallel computing you could dream of. And this right here is the part that almost everyone misses. CUDA isn't hardware, it's software. It's a whole programming language and ecosystem that for the last 18 years, millions of researchers and engineers have been building their entire careers on. Think about that. That means that basically every single major AI framework you've ever heard of, it was built from the ground up to run on NVIDIA. What this created was one of the deepest, stickiest platform lock-ins in the entire history of computing. You see, switching away from NVIDIA isn't as simple as just buying a different chip. Oh no, it means you have to rewrite your entire software stack. It means retraining your whole engineering team. So yeah, the chip is the product you buy, but CUDA is the moat, and you simply cannot rush 18 years of development. So, after all that, CUDA, this massive pivot, over a decade of patience, what did it all turn into? Well, the numbers, they're just staggering. Let's take a look. Okay, let's just run through this. In fiscal year 2024, NVIDIA's revenue hit $61 billion. A year later, in 2025, it more than doubled to $130 billion. And the projections for fiscal 2026, they're close to $216 billion. You see the pattern here. The growth isn't just happening, it's not even slowing down. It's actually accelerating. And all that revenue, it's projected to generate $120 billion in pure profit net income. Now, to put that number into perspective, think about Apple. For the last decade, Apple has pretty much been the most profitable company on the planet. Well, in their last fiscal year, they earned 94 billion. NVIDIA is now set to blow right past them. So you might be asking, who on earth is buying all these chips? Well, it's the giants, the hyperscalers. We're talking about Microsoft, Google, Amazon, Meta, and get this. Together, they've already announced they plan to spend around $660 billion on AI infrastructure in 2026 alone. A huge chunk of that money flows directly into NVIDIA's pockets. But, and this is a really big but, that's only half of the story told. Because right now, NVIDIA is facing four very significant risks. And these aren't just hypotheticals. They're real, they're documented, and they are not going away anytime soon. So let's start looking for the cracks in this foundation. Risk number one is China. It's the second largest market in the world for AI chips. So it's obviously a huge deal. But US export controls, which were put in place for national security reasons, have created this constant cat and mouse game. All this uncertainty has already cost NVIDIA a $4.50 billion charge. And when you realize that about 13% of their total sales are at risk, yeah, the China situation is a permanent headwind they have to deal with. Okay, the second risk is a little more theoretical, but it's the one that really keeps sophisticated investors up at night. It's called the Jevons paradox. Here's a simple way to think about it. Fuel efficient cars. You'd think when cars got more efficient, people would use less cars, right? Nope. What actually happened is people just drove more and overall fuel consumption went up. So when that DeepSeek model showed you could train AI with fewer chips, what happened? The stock crashed, but then it recovered because investors started thinking, wait a minute, if AI gets cheaper to run, that's just gonna create a ton of new demand for AI applications, which ultimately means we'll need more chips. And that's the bull case in a nutshell. But, and here's the real concern, there has to be a ceiling to that logic. At some point, the explosive growth in demand for these super expensive chips has to level off. We just have no idea where that ceiling is. Risk number three is a bit ironic actually. It's competition from NVIDIA's own customers. I mean, think about it. Google, Amazon, Meta, they're all pouring billions into building their own custom AI chips. Now, are they as powerful as NVIDIA's top of the line stuff? No, not yet. But they're cheaper and they're perfectly optimized for their own specific needs. So you have this weird situation where NVIDIA's biggest customers are also at the same time their biggest potential competitors. And finally, the fourth risk, this one is really about optics. Between 2024 and 2025, CEO Jensen Huang sold around $713 million worth of his NVIDIA stock. Now, this was all done through a pre-scheduled, totally legal selling plan, but when a CEO is out there publicly predicting exponential growth while at the same time selling hundreds of millions of dollars of his own shares, well, it's just a good reminder to always consider what the incentives are. So where does that leave us right now? Well, after that recent drop, the stock has been climbing back up, and in a way that really suggests the big investment firms are buying in. And now all eyes are on one specific date, late May 2026. That's when NVIDIA is set to release its next earnings report, and it's going to be huge. So when that report drops, here are the three crucial things you need to be watching for. First, their guidance for Q2. Right now, analysts are expecting something in the $78 to $80 billion range. If they come out with anything above $85 billion, that could send the stock to brand new highs. Second, what they say about China. Any negative update on the export situation is definitely gonna move the stock. And third, listen for any news on Vera Rubin. That's their next generation chip. The company's entire future forecast really depends on it being on schedule. Alright, so let's try to bring this all together. On one hand, you have NVIDIA selling the absolute fundamental infrastructure for the entire AI revolution. The numbers, they're real. The competitive mode they have with CUDA, that's real. The growth, also very real. But on the other hand, the uncertainty with China is real. The competition from their own customers is real, and the questions raised by all that insider selling, those are real too. And the hardest part to wrap your head around is that all of these things can be true at the exact same time. Look, this is just what it feels like to be at the frontier of a brand new technology era. It's never a simple story with a clean answer. So I'm gonna leave you with the one central question that everything boils down to. Do you believe this AI spending super cycle has another 3 to 5 years of growth left in it? Or do you think we're much closer to the peak than most people realize? I'd love to hear your reasoning, so drop it in the comments. We'll find out more after earnings.